Hello, everyone. Welcome to VRIC Media, your most trusted voice in metals and mining. I'm your host, Daryl Thomas, and today we're talking with one of the experts in our industry, Jeff Clark. How you doing today, Jeff?
Great, Daryl. I'm doing well. Thanks for having me. And yeah, lots to talk about in the gold market right now.
Yes. So at Gold Advisor, how are you all viewing the recent price action with gold and silver?
Well, first of all, it may be surprising to some, but I've heard Rick Rule say this. That is, I love it. I love the big correction. I've said it before, but I love big dips, and I cannot lie. And that's because Daryl, it's like the most sophisticated strategy in the world. Some of the biggest profits I've ever made as an investor personally have been buying these big dips, these big corrections. It happened for me. I bought the COVID dip, as scary as it was. I loaded up. I got silver as low as $13. Mining stocks just went 3, 4, 5x. It was crazy. And I'm buying this dip now. So I love it. If there's a stock that somebody's missed, that I missed, or one that I want more of, I think we all have that, right? So I'm viewing that as an opportunity, as a window to get the things that I want. And it's all rooted in the fact that I don't believe the bull market is over. I think there's another big leg ahead.
Yeah. So obviously we've had a big move over the past year and such, and we had a big drop off. So how are you viewing silver right now? So silver, equities have gotten crushed or whatnot. The price is down over 50%. Obviously, a good buying opportunity. And you mentioned that the bull market is not over in your view. And so for silver specifically, why do you think the bull market isn't over for silver?
Well, silver will follow gold. Gold will lead, silver will lag, and that happens in every bull market. But what also happens, I'm sure the audience knows, is that before the bull market is over, silver catches up and passes gold on a percent return basis. So if you're looking for the better opportunity between gold and silver right now, it would clearly be silver. The gold silver ratio is down around 68. I believe, as you and I talk. The historical average is 55. If you go back to the 1970s, the average is 50. It was low as 30, I believe, at 2011. It got to 17 in 1980. So clearly, the opportunity is there for silver to really outperform gold before this is all over. And some of the silver equities, now we were up pretty big on them. If someone's been invested in the market for a while, they're probably up nicely on them still, but they've had an even bigger correction than the gold equities have. And again, that's a window for me to, look at new opportunities, buy a stock that I missed, get more of what I want. So now I definitely don't ignore gold. In fact, I own more gold stocks than I do silver ones for different reasons. But if you're looking for the better opportunity right now in terms of potential, I think that lies with silver. Now you have to keep a longer term frame of mind in place because we don't know when this is going to turn around and reverse. September is gold's historically best month of the year on average, going back all the way to 1970s. So maybe it turns around then. Maybe it's not till 2027. I hate to say that, but that could be possible. So, but for me, it's not the how long it really lasts. It's looking at opportunities, individual companies that have something going for them and have very compelling reasons to own them and compelling reasons why their stock is going to do well, even if the reversal in gold and silver doesn't happen till next year. So if you focus on companies and a little less on the metal, I think you can see that there's a lot of opportunity there.
Yeah. So speaking of silver and, thinking broader with the macro view, obviously deficits in the mining that's still a catalyst in everything. And then also I was thinking about the amount of volatility with silver. Like it seemed like it scared some people out of out of the silver investment thesis because like to have like a over 50% drop, that was
Yeah.
very significant. Gold didn't drop that far. And so for me, getting the courage to buy silver again. I mean, it has been a challenge. I did buy some physical silver here recently. Um, most of the equities I've been buying have been the royalty companies because they've been, trading at some really good discounts and such. What's your advice for investors in silver? I mean, like it seems like you got to have some really thick skin and really some courageous spirit, to invest in that market.
Absolutely, I agree. You do need to have some thick skin. Silver is more volatile than gold. The reason is because it's such a small market that it doesn't take much money coming into it to impact it as much, both up and down. And we're seeing the down right now. But how would you like to buy an asset 50% off its all time high that, in our opinion, will have another big up leg sooner or later? So you're getting it on a 50% sale, almost a going out of business sale because so many people are either selling or not buying. So that's how I look at it. Now, I'm comfortable with the amount of physical gold and silver that I own, so I'm not personally buying. But if I didn't have much or any, I would absolutely be looking to leg into these dips that silver has. The biggest sell offs in uh, gold, for example, we're down almost 30% from peak to trough in this particular correction. The sell off in the 2008 financial crisis was 30%. So we've matched the great financial crisis in terms of a sell off. Silver is similar. So that's how we look at it. This is a great opportunity to leg into some of the metal that you want, especially if you don't have any or enough.
Hmm. Got it. So let's jump into some companies. So what parts of the chain are you interested in now since we've had these sell-offs? And then I would like to just kind of dive into some of your framework and some of your further thoughts on each company. So who you got first on your list?
Well, first of all, I've got some what I think are some great picks for people. But first of all, I invest in certain categories. I don't invest in developers. I don't really invest in producers. We have a couple producers, but that's because they were explorers, then developers, and became producers. What I invest in is some very specific stages. One is pre-discovery. Now, that's obviously your highest risk, but it could be your highest potential reward. Look at Snowline Gold. We were up as much as 45x on that. So those
Hmm.
don't come around often, but pre-discovery can work if they make a discovery. The second category is a pre-resource play, a company that has made a discovery, but they haven't declared a resource yet. And sometimes that resource announcement can ignite the stock because it can catch the market off guard. They can see, oh, they really do have something here after they made that discovery. The third category is a resource builder, someone who has a resource. So this is a little bit lower risk category now. Um, there's plenty of these companies out there. We like some that we have in our portfolio, but the resource builder is one that's going to go from, let's say, 1 million ounces and not add 10 or 20% to that resource, but double or triple or more that resource. That's the kind of company I'm looking for. And of course, that can impact the stock very nicely. And the last category is the pre-producer, the company that's made a construction decision that they're going to build a mine and produce metal, from construction decision all the way up to first pour. That time period right there can be very lucrative. Based on research, there's a 90% chance of a 90% gain in a stock during that period. I really like those stocks, that stage of stocks as well. So
That's a
for
quick
some picks to
question.
answer your question.
Quick question. Quick question, Jeff. So
Yeah.
the resource builder, so that part of the chain is where companies are looking to, you said companies are looking to add to their resource. So this is different than a reserve. So they aren't at the reserve status. They're looking to add to the inferred or indicated resources. Is that correct?
Well, a lot of these are adding to the resource, but a lot of them are trying to convert resource to reserve. The reason being is because that reduces the risk with that asset of it actually producing economic metal. It also makes it more attractive to a senior or a producer who's looking for ounces. So they just de-risked it. So the actual resource may not go up that much, but when they convert, that can be very attractive too, and it reduces the risk. So both of those things are happening. So you're looking at companies that can convert the metal, but also can grow the resource.
Got it. Got it. Yeah. So I was actually we had Mayfair Gold on our show, and they have a 4 million ounce, 3 million ounce resource and 1 million ounce reserve. And so, we were kind of having that discussion, like, okay, does the resource build? What's the process for getting these other 3 million ounces to reserve and such? And so, yeah, that's interesting. I never looked at the pre-discovery, pre-resource, resource builder, pre-producer, kind of just breaking it
Yeah,
down that way. So I appreciate those different
that's
ways.
where I invest. That's where all my money goes in those four categories.
Yeah, yeah. Okay, so who you got on your list?
Okay, so several here in different categories, but one thing I like about each of these picks is that some of them moved big, especially in January, but they've given back a lot of those gains. And so the entry point right now is very attractive. You're getting them on sale again. That's why I selected these. So the first one is a resource builder, and that is A2 Gold. This is a junior in Nevada with a resource that's looking to prove up a multi-million ounce gold deposit in Nevada. One of the few companies in Nevada right now with that possibility. This is a high caliber team. I invested because one of the gentlemen behind other companies has created vast shareholder wealth, and I think he can do it again here. Eric Sprott's invested in this company. Kinross Gold has invested several times in this company. In fact, they're on the technical committee, and this asset is right beside Kinross's Round Mountain gold project mine, one of the largest open pit mines in the world. And A2 Gold has got an asset right next door to it and has similar geological characteristics as Kinross's gold. So the stock is like half of its February peak. Great entry point. I'm personally overweight this stock. The next one is a favorite of mine called Pacifica Silver. They have the Claudia silver asset in Mexico, high grade silver. They just released yesterday, from the day we're talking here, news about an anomaly they've identified that's underneath the silver they've been finding. So the question naturally becomes, is this a source of where all the silver they've been finding is located? So if that proves, they're drilling it right now. They liked what they saw so much, they moved the drill over to this site to drill it. They're drilling right now. And by the way, I'll be there on site next week at the Claudia project in Mexico, and I'll be able to see the drill core that's coming out of this asset. I really like it. I'm personally overweight this stock. If this is the source of all the metal they've been finding, that's going to be a game changer for the company. And then a pre-discovery play, so a little bit higher risk, and that would be Stallion Uranium. This is a team that's made uranium discoveries before, drilling in the Athabasca, right next door to the Arrow discovery, which is going to become a mine. And the geophysical footprint of what Stallion has is actually bigger than what the Arrow deposit showed in its infancy. So very compelling. Again, pre-discovery, so a little higher risk, but if they hit, boy, look out. I am personally overweight that stock. Then we have another newer pick that we have in our paid newsletter. I'll give you one of those, and that's called Sun Peak Metals. Their assets are in Saudi Arabia. A year or two ago, you wouldn't have really considered Saudi Arabia, but the government has just opened up their land to gold exploration. Sun Peak Metals is one of the first ones in there. They have a large land package. They're doing a lot of geophysics and other preliminary work right now. They're going to be drilling for the first time in later this year. But Saudi Arabia is open for business, and it's one of the most underexplored but geologically proven mineral belts in the world. It's like you investing in a company that was drilling in Quebec, 50 years ago or 100 years ago, even. So that's the kind of opportunity that's there. I'm personally overweight that one as well. And then I'll give you a copper pick. It's one of our newest picks. It's called Getty Copper. Not many people know about this company, so I love that because all the funds and investors and people that could come into this don't even know about it yet. So there could be lots here. The flagship project is right next door to Teck's Highland Valley Copper Mine, and that copper mine is doing fine. It's producing, but the head grades going into the mill are only 0.24%. Getty Copper, in their very first drill program, just hit 342 meters of 0.5% copper. There are more assays pending. The stock did jump on the news, but it's pulled back now, so there's a very good entry point there. They're drilling 16,000 meters this year. I'm personally overweight this stock, so I see it as a great speculation. It's a pre-resource play. They've made a discovery, so the risk is a little lower than a pre-discovery play. But we'll see what kind of results they continue to get. But I sure like it.
Okay. So with each of those companies, what are the kind of risks that they have to overcome? And so I know you're looking at it from like the positives, and then I'm sure there's some level of risk that you have to assess. What do you think for each of those companies? What are the kind of biggest risks that you're like?
Yeah,
Oh,
that's a great question because nothing is guaranteed. Not everything works out, right? For just in order here, for
yeah,
A2
yeah,
Gold,
yeah,
maybe the resource that they're looking for isn't as big as they hope it would be. I think it's more likely that it is as big as they think, which would be 2 to 3 million ounces from the one they have now. But again, maybe it isn't that big. Pacifica silver, maybe that geophysical anomaly they identified is not, maybe it's just, pyrite or something. It's not economic metal. We don't know if it is yet. So that's the risk there. Stallion uranium, um, the geophysical footprint is very compelling, but it doesn't mean that there's another arrow deposit there. Um, Maybe there's not, or maybe it takes them 3, 4, 5, 6 drill programs to really identify it. They're taking their best shot right now. And by the way, assays are pending, they're imminent. So you might want to consider that. Let's see, Sun Peak Metals. Again, this is a pre-discovery play, so it's higher risk. Maybe they don't hit on their first program or two or three. So sometimes these take a while to really identify where economic metal might be. And then Getty Copper, that's probably the lowest risk one I could give you
yeah,
because
yeah.
they've already made a discovery and they're still drilling aggressively. They've got a great team behind it. But again, maybe the next batch of assays are not as good. Maybe they have a more difficult time proving up the resource. So that's a risk there. Now, I personally like this speculation because I think they've got a good shot at proving up something there. So, but those are the
Mhm.
risks there. That's a great question.
Yeah, yeah. So in terms of your kind of investment philosophy, or however you go about your investments, so with those risks, like when you're looking at those risks, what are some ways that you kind of mitigate that? So I know some of the companies you've been loading up on, but the audience probably needs to know, like, you're not throwing all of your money into one company, or into these five companies,
Right.
and so how are you kind of balancing that out? Do you do it by a certain percentage, like of how much you want to weight it in your portfolio? How are you
Yeah.
kind of managing that?
Yeah, that's a great question. I have for me a dollar amount that is what I consider to be a full position. I'm fully invested into that stock. I also have a higher dollar amount that is an overweight position, meaning I like this even more, and I've invested in an overweight percentage on for my personal portfolio. So everyone has to come up with what's the dollar amount for the average amount you want to put in each individual stock, and you want to follow that because you want to spread it around. You have to diversify, and you can't put all your money in one or two of these things. Um, but spread it around, and then you have a good shot of reducing your risk. I think you have to diversify. You need to come up with that dollar amount you're comfortable with, and invest accordingly. But the most important thing is that you do diversify, you spread it around. Now, I don't adhere to what some newsletter writers do, and they've got 50 or 100 stocks in their portfolio. So what if you've got another Snowline Gold in your portfolio and it goes 40x? If you've got 40 other stocks, your portfolio goes up by 1%. That's not gonna, or in that case, 4%. So that's not going to really do it for me. So I don't want to have too many in there.
Mhm.
But I really want to focus on best of best. And right now you have a window where the prices are a lot better than they were, what, 5, 6, 7 months ago.
So when it comes to like selling, so obviously some of these junior companies can get ahead of themselves really fast. I mean, you could be sitting on, I mean, you mentioned the 40 bagger with Snowline Gold. So are you holding through times like this with the prices, the gold and silver prices, like where they've corrected significantly, or are you taking profits off the table? What's kind of your way of realizing some of those gains that you have?
Well, I always say people should take profits if you're sitting on a double or more, and maybe people aren't sitting on a double or more now. I am with many of them, and I think people that have been invested for a while are, but Um, I'm riding it out if that company still has compelling upside, if the fundamentals are still in place, if they're still pushing forward. Remember, 6, 8, 10 months ago, all these financings that just ballooned higher with all these companies. They went from raising $1 million typically to 5 million, or the one raising five was suddenly able to raise 10, or the one that raised 10 is now raising 50 million. We've seen an enormous jump in the dollar amount that's going into these financings. So these companies are very busy. That increases our odds of making a discovery, growing a resource, etc. So I really like that. I want to stay invested in the best companies because there's a lot going on with them right now. So I want to be invested and stay with them. And then again, like I mentioned earlier, because of the sell off, I'm adding to shares if I, don't have as much as I want. Looking for brand new opportunities. We have some new picks in our paid letter, and we also have some other new picks coming, at least two more before the September MIF. So it's pretty exciting. I'm trying to take advantage of it, and I can tell you I'm personally investing very aggressively.
What are some of the red flags you look for? So when you're looking at researching these different companies, and that's I'm sure you run across red flags. What are some of those red flags that would make you not want to touch a company with a 10-foot pole?
So I have a story about that. So this was years ago. A friend of mine emailed and said, "Did you see that hit from XYZ company?" And I wasn't familiar with it, and I didn't see it. So I looked it up, and it's like, "Wow, this is a really good hit." Um, so what I did next was look at who's behind it and where it is. And I did not like the CEO that was behind this company. Not that he wasn't a good person, but he was awarding himself many shares and many options without him personally investing. Now, he did put some of his own money in the company, but he was giving himself millions of shares, on the slide, basically, and that just turned me off, and I couldn't do it. It was in a pro mining jurisdiction, but because of the person that was running the company doing that kind of behavior, I passed. I didn't want to invest. So the first thing I look for is who's behind it and what are they doing? Have they created shareholder value before? That's number one for me. And number two is still not the drill hit, is where it's located. It's got to be in a pro mining jurisdiction. Now, I do invest in, some areas, some countries that aren't necessarily pro mining, but, I might invest a lower amount, or I'm looking only best of best when I take that chance. So I do that, but I might exit sooner as well, because the government may be pro mining now, but next election they may not be pro mining. You never know. So you have to watch that with those. So those are the two things I'm looking for, and then I look at the project, because those two things have to be in place, or I'm just not going to invest. And the project has got to have, something that's like my grandma's chocolate chip cookies, big and rich. It's got to be big enough to matter to a producer to want to buy this asset. In fact, that's the number one question that I believe investors have to ask, and I ask it all the time, is every press release with every company you own, or every company you're looking at, is, can this deposit be economic?
Hmm.
That's it. Because nothing else matters. If they're not going to get bought out, then it doesn't matter. Maybe they'll try to develop themselves, but if it's not big enough to a major, or any producer for that matter, then maybe it's not going to be workable for them. So I'm always looking at, that's my number one question when I look at a project.
Okay. Okay. That's helpful to know. Is there anything on the geological front where, you may say, yeah, this isn't like when it comes to drill results, or, some people look at the tonnage, the grade, the strip ratios, all of that. Are there any of those components where you look at where you're like, okay, I think I'm gonna stay away from this?
Yeah, you want to look at all of that eventually, right? And I know it's a lot, but I ended up writing a book on this topic. So
Yeah.
people can look at that on Amazon if they want. Pay dirt. It's not expensive, but all those things come into play as they get more and more drill results, right? Um, and by the way, we just added a geologist on staff. So when we're looking at a company, we have her evaluate these companies in the background for us. And then if we launch it and recommend them, we have it's called Ground Truth article inside our write up from our geologist, looking strictly at the geology of the project and whether it's prospective or not. Um, so all those things come into play. Obviously, geology, Mother Nature had to leave something there for this to be a successful investment.
Hmm. So what other visits you got planned? So you got a couple. You mentioned earlier you got a visit planned to view a project. How often are you doing this? And especially, I mean, I guess if you're recommending certain companies, like even some of these companies that may be on this list, you may have plans to visit at some point. So,
Yeah, I'll be at Pacifica Silver in Mexico next week. Um, So I'll be looking at that project firsthand. It's an analyst tour. We'll be able to look at the core that's coming out of this new area. It's called Judy, to see, what it looks like, and is this a source of the metal? That's going to be the big question, right? Then after that, taking some time off in August. Then I go to the September Metals Investor Forum in Vancouver. Then I'll be at New Orleans in October. Then I'll be, and Daryl, I'll announce it here first. You're the first to hear. The Gold Advisor Network is going to have its very own conference. So we're excited about it. It's November 5th in Vancouver. The Myth people are going to put it on for us. They'll be the sponsor, but it'll be just Gold Advisor and Silver Advisor companies. So it's our very own conference. So that'll be pretty exciting. We're going to do a couple different things than what you might see at a normal conference. So it should be exciting. But that's the schedule. And then as far as the site visits go, we have a full staff now. We have full-time writers and analysts on each of our newsletters, both free and paid. So they're going to some of these site visits now. On the silver side, we had, I think, 3 site visits already this year. On the gold advisor side, we've had 3 and more coming. So all of us go in these site visits as we can.
mhm.
So those reports are kind of fun, because it's kind of like you're right along with the analyst, right? With the pictures and the tour itself and all of that. So they can be fun. And I'll be writing up one on Pacifica Silver too when I'm back.
Got it. Got it. Well, yeah, thank you for all that valuable information, Jeff. So, everybody, be sure to go check out the goldadvisor.com. Be on the lookout for the conference coming out. I'm hoping that I can make it out there. Appreciate you announcing it on the show, Jeff. And you all hit the subscribe button if you haven't subscribed yet. Love to have your support. And thank you all for watching. And Jeff, we definitely going to stay in touch.
Definitely. Thanks for having me, Daryl, and I'll see you next time.